What's up, everybody? Altin here, and everybody's been asking me how to invest in the stock market and what to get or how does it even work. So I decided to make a YouTube channel. So I will start off today going with some basics of what the market is, how it works a little bit. I'm not gonna go into depth. This won't be a long video. I'll have a couple videos posted today. Definitely another watch list for this week. And that's it. Let's get to it. So there's three major indices: the Dow Jones Industrial Average, S&P 500, and the Nasdaq. It is important to know what these three are composed of. So the Dow is like all the industrial, like Dow is the grandfather. It has the 30 biggest companies pretty much are in there. And then you have the S&P 500, which is the top 500 companies into one index, which is what we're looking at right now. SPY, which is an index you can buy for the S&P 500. As you can see, in the long run, you're profiting, you're making money. So this is what I tell people to buy, or put at least a good chunk of their money into this, because this will give you 10% a year. And you can go trading with a little bit of other money, but you don't want to do risky stuff. So you buy this, and it makes you pretty good money. And then now you have Nasdaq, which is, well, to say the least, it's crazy. It is insane. But yeah, so you have Nasdaq, you have S&P 500, you have the Dow. You know, these are important things because you have to remember, if you're trading, say, let's say Apple AAPL, I mean, is the ticker. Every stock has its own ticker, so every broker can find the stock you're looking at, and the price and whatnot, self-explanatory. After hours, we'll talk about that. After hours and pre-market, we'll talk about that later in a different video. But this, I just want to try to keep it really simple. This trades on the Nasdaq. It's on the Nasdaq, but it's also top holdings in the Dow. So this will push the indices up if it goes up. FANG, Facebook, Apple, Google, Netflix, FANG, Microsoft, all those stocks, those big tech stocks, will push the Nasdaq up if they go up, and the Dow too, and the SPY. So typically, these are just like, you can say stocks will follow these, but these follow stocks at the same time. So these are not their own things. These are not being traded. These are not like people buying, selling the Dow or Nasdaq. Futures, yes, but we'll talk about that's a different thing. Like, that's not important right now, but no one's actually buying and selling this. This is, if you take the stocks that are in, I think Nasdaq is the top 100 stocks in the Nasdaq, and they average them a certain way, and you get this number, this magical number. That's all fine and dandy. Now you understand how indices work. There's another major topic, is the bulls versus bears. What is a bull? A bull market, well, I should say, what is a bull market? Now, what is a bull? A bull market is, if you go here, this is a bull market. You see, you got a night. So it doesn't start until like around when it breaks the all-time high, so around here, and it keeps going until it hits a 20% decrease, which is what we got right here. And then technically you're in a recession, or I guess in our terms, a correction, which they are a different recession. This is a recession. You see, it's continuously, these are monthly, by the way, each tick is a month, so these are continuously going down for a couple of years. That's a recession. This is a recession. This is not a recession because it wasn't fast enough, and or like it wasn't 20%. Like, this didn't end at close at 20%. So this is not technically a recession. It's fine. And now you'll see this, which is, this is a recession. This is 20% easily. 20%. All right. So that's a recession. But as you can see, we're already in another bull market. So the bulls want the stock market or the stock or whatever you're trading to go up. So they buy it. They go long. The bears make money when the stock market goes down or when their stock or whatever they're trading goes down. So they'll short it. So what they do is they ask their broker, hey, can I borrow a share of this stock? I'll sell it at the current price it is, and I'll buy it at a lower price, and I'll make the difference, give you the stock back or whatever. And that's how they make their money. Obviously, they can lose money, and so can the bulls lose money. So this is important because I say this is very important because the way I look at the market, you're not supposed to look at it as a game because you're playing with your money. This is investment money. This is why I tell people if you want to invest in the stock market, rule number one, you put money in that you don't care about. You know why? Because if your stock goes down the next day, you won't sell it. You'll hold it. You'll be a long-term holder. And in the long run, if you hold a stock, Apple, in the next 5 years, we'll look at the show Apple. Because people don't understand this. They just want to trade quick. They want to make quick money. If you bought Apple anytime in the past 12 years, you would have made money. Why would you ever sell? Why would you ever buy any other stock, like a penny stock? Buy Apple, Microsoft, big stock, big name stock. Even if it does fall, you're buying into a big name, though, at least. So you can average in later on in life. So that's why I like to look at stocks like this and get real people, make sure people understand. But what was I saying before? So bulls versus bears, it's much easier. Bullish people are more long, obviously going to be long term. There can be long term bears, but it's typically short term unless they think the company's going bankrupt or whatever. Bull markets tend to last a lot longer than bear markets, which makes sense. We had a 10-year bull market, I think over 10 years. The bear market was like 1 month. It's crazy. But yeah, people have to be careful now because what's happening in the stock market is not normal. This is not normal. If you know anything about the history of the stock market, you'll know that what's happening now could be considered a bubble and might be induced by the government. But we'll talk about that another day. So you got the bears, you got the bulls, you understand that now. Understand the 3 indices. You understand going long is pretty much simple, no-brainer. If you pick big name stocks and you put a lot of your money into indexes. Look, I think that's good enough for this beginner video. We'll talk about the moving average and volume weighted moving average. Next video, I guess. Look, I'm just YOLOing at this point, trying to teach you guys about stocks, and hopefully I can get all this boring stuff out of the way first. This way we can start doing more interesting stuff. I will start making a watch list after this, and I'll also post it a couple hours after this video. I hope you guys enjoyed. Like, comment, subscribe. If you have any questions, leave it in the comments. I'll help you guys with anything, honestly. I'm very nice. Remember, I'm not a financial advisor. It's not my fault if you lose all your money. Have a nice day, everybody. Goodbye.